Major merger of China's asset management companies rocks Chinese finance sector. Secret police Jinyiwei spotted at Henan high-speed rail station, terrifying netizens. Liquidating Evergrande, sobering reality hits China's property sector. CCP formally accepts Taliban's diplomatic credentials. It's all covered in today's China Truths. Major merger of China's asset management companies rocks Chinese finance sector. On January 28, Chinese state media, Xinhua Finance and Economics, unexpectedly revealed major news. They announced that China's three major asset management companies, AMCs, namely China Orient, Cinda, and Great Wall, would merge into China Investment Corporation. This move was stated to be in response to Beijing's institutional reform plan. This announcement sent shockwaves through the Chinese financial sector. If this information is confirmed, it would mean that the four major asset management companies established by the Chinese authorities 25 years ago to address non-performing assets of major state-owned banks will no longer exist as independent entities. This development prompted some Chinese media to declare the end of an era. Interestingly, by January 29, Xinhua Finance and Economics article had disappeared. Although Google searches still displayed the article's title, clicking on it resulted in a page not found or has been deleted message. As a national-level financial information platform operated by the state-owned Xinhua News Agency, the act of Xinhua Finance and Economics deleting such significant financial news shortly after its release is indeed unusual. According to publicly available information, China Investment Corporation, also known as China Investment Company Limited, was established on September 29, 2007. The company's official website states that its formation aimed to diversify the investment of the country's foreign exchange funds and serve the needs of the country's macroeconomic development and the deepening of financial system reform. An article in China Fund News on January 29 offers an overview of the establishment and growth of the four major AMCs in China. During the 1990s, excessive lending by commercial banks resulted in the accumulation of a significant number of non-performing assets on their balance sheets. To ensure that negotiations for China's accession to the World Trade Organization, WTO, proceeded smoothly, the CCP authorities established four asset management companies in mid-October 1999. These companies were China Huarong, China Great Wall, China Orient, and China Cinda, with a specific focus on managing non-performing assets. The Chinese Ministry of Finance injected 10 billion yuan, approximately $1.4 billion, of capital into each of these four companies. The People's Bank of China also provided 570 billion yuan in re-loans, and the AMCs were permitted to issue 820 billion yuan in financial bonds to state-owned commercial banks at a fixed interest rate of 2.25%. They used these funds to acquire 1.4 trillion yuan worth of non-performing assets from the four major banks. Subsequently, these four asset management companies underwent shareholding reforms, with China Huarong and China Cinda later becoming listed companies in Hong Kong. As the market evolved, these companies transformed into financial holding platforms, encompassing subsidiaries such as banks, insurance firms, securities companies, trusts, financial leasing companies, and other financial institutions. It's noteworthy that the largest shareholders of China Cinda, China Orient, and China Great Wall, the three major AMCs, are all the Chinese Ministry of Finance. Recently, the international credit rating agency Moody's comprehensively downgraded the ratings of these four major Chinese state-owned asset management companies, AMCs. Among them, China Huarong's long-term issuer rating was lowered from BA3 to BA1, placing it in the non-investment grade category, often referred to as junk grade. China Great Wall Asset Management's rating was downgraded by 2 notches from BA1 to BA3. The higher-rated China Cinda and China Orient both lost their A3 ratings, with the former being downgraded to BA1 and the latter dropping by 2 notches to BA2. Moody's cited reasons for these downgrades, including China's decelerating economic growth, continued pressure on the real estate market, and ongoing challenges faced by the AMCs related to profitability, asset quality, and capital conditions. The announcement of the merger has sent shockwaves through the Chinese financial sector. During the 2024 Fortune Innovation Forum hosted on the Fortune Chinese website, several financial experts and industry insiders shared their perspectives. One insider, Ms. Black, emphasized that most AMC companies primarily manage non-performing assets. The incident involving Huarong, one of the four major AMCs, which had already been absorbed into CITIC Group, has exposed the industry's risks to the public and regulatory bodies. Over the past few years, two of the four major AMC companies listed on the stock market issued profit warnings for the first half of 2022, indicating their precarious financial health. Now, with the rumor circulating that the three major AMCs will merge into China Investment Corporation, it may be seen as a strategic move by regulatory authorities to address the imminent risks. Secret police Jinyiwei spotted at Henan high-speed rail station, terrifying netizens. On the eve of the Chinese New Year, there is a significant movement of migrant workers returning to their hometowns via high-speed rail in various locations. In Henan, a group of post-2000s college students dressed as Ming Dynasty Jinyiwei, meaning secret police, made an appearance at Luoyang high-speed railway station, reportedly offering assistance to migrant workers and passengers. The video capturing these scenes was published by Henan Elephant News on the afternoon of January 28, titled Post-2000s Dress as Jinyiwei to Welcome Returning Hometown Residents. One of the young men, surnamed Zhou, portraying a Jinyiwei, said that he joined this activity with the intention of making migrant workers feel welcome upon disembarking from the train. The incident has sparked heated discussions among netizens. They found the presence of Jinyiwei at the high-speed railway station perplexing, given the historical association of Jinyiwei with the abuse of power, torture, interrogation, political persecution, corruption, and the creation of a climate of terror during the Ming Dynasty. Some mainland netizens candidly described the situation as terrifying and opined that ignorance is indeed alarming. The videos related to this incident also generated discussions on overseas platforms. One netizen commented, "This should be viewed alongside the video of bank depositors from villages and townships being apprehended when alighting from trains in Henan." As the situation continued to escalate, personnel from the Luoyang Municipal Bureau of Culture, Radio, Television, and Tourism indicated on the afternoon of the 29th that they were in the process of verifying and comprehending the incident. On January 30th, political commentator Chen Pokong shared his insights in a video program, suggesting that if these college students participated voluntarily, they might lack historical awareness. The Jinyiwei symbolized the internal struggles, bloodshed, and cruelty within the palace during the Ming Dynasty. Those who served in the palace were individuals unhesitant about taking lives. How could such a scenario evoke warmth? Alternatively, the students' indifference to reality could be another explanation. Chen Pokong explained that, in reality, people are apprehensive about various special security agencies under the Xi Jinping regime, and Jinyiwei has become a term encompassing various special security agencies operated by the authorities, including Public Security, National Security, the Ministry of Social Work, and even initiatives like the Fengqiao Experience, which involves mobilizing special agents among the populace, including student agents. However, the Ming Dynasty did not escape its downfall despite implementing a sophisticated special agent system. Instead, these Jinyiwei scattered like birds and beasts after the dynasty's demise. However, Chen Pokong also raised the possibility that these students may have been originally organized by government authorities, with their actual role being to maintain stability in the lead-up to the new year by psychologically intimidating returning hometown residents. While presenting a facade of concern for the people, it could be a covert strategy by the Chinese Communist Party, using plainclothes individuals to surveil the population. Liquidating Evergrande, sobering reality hits China's property sector. The Evergrande Group's winding up order by a Hong Kong court on Monday could serve as a precedent to the restructuring required to clean up the excesses in the Chinese property market while protecting the interests of its foreign creditors, according to experts. The initial optimism of clearing out the deadwood to help Beijing contain a deepening crisis, however, is gradually giving way to a sobering reality check. liquidating the most indebted property developer could further erode the confidence in China's property and capital markets. Moody's said in a report on Tuesday, the decision is credit negative for the broader property sector as it will weaken already fragile investor and market sentiment and will likely affect home buyers' purchasing decisions in the near term. According to the global ratings agency, while there have been instances of smaller Chinese developers going bankrupt in the past 2 years, China has no precedence of foreign creditors having direct control over or claims against a company's onshore assets. In addition, Evergrande has more onshore creditors with higher claim priority, which creates a situation where the recovery of offshore creditors is not guaranteed in comparison to onshore creditors. Hence, the Hong Kong court's order will be more challenging to implement owing to Evergrande's complicated organizational structure, which comprises several subsidiary companies that develop and fund property projects around the country. The Moody's note said, overall, we expect the liquidation to take time. Evergrande, the poster child for China's property crisis, defaulted on its debt in 2021, sparking fears of contagion in the Chinese economy, which still suffers the consequences. The Shenzhen-based developer, which had total liabilities of 2.39 trillion yuan, about $333 billion, at the end of June last year, sought bankruptcy protection in New York in 2023. Overseas creditors are owed $25 billion, according to a Hong Kong court document, and one of them, Top Shine Global, filed a winding-up suit against Evergrande in Hong Kong in June 2022 to recoup a portion of its losses. Yet, even after months of wrangling, the developer was unable to reach a deal with creditors, and its founder, Hui Kai-yen, was ultimately apprehended by Chinese authorities in September last year on suspicion of criminal activity. Diana Koileva, founder and chief economist at Inodo Economics, noted in a LinkedIn post, the liquidation of Evergrande is, therefore, necessary in the broader context of rectifying the imbalances within China's property sector. Another blow to investor confidence. Given that Hong Kong and some regions of China have a mutual agreement on bankruptcy and restructuring, this decision might theoretically allow the liquidators to try to take control of some Evergrande assets in mainland China. Evergrande Group is one of many Chinese developers, including the largest private developer, Country Gardens, that have failed since 2020 due to state pressure to rein in rising debt, which Beijing sees as a danger to China's sluggish economic development. Reportedly, Chinese developers will need to repay $100 billion in maturing debts this year, while local governments' finance arms, called local government finance vehicles, owe $650 billion. The court judgment could also have consequences for other developers that are still in the midst of prolonged restructuring talks with offshore creditors. Brock Silvers, chief investment officer of Hong Kong private equity group Kaiyuan Capital, said in his LinkedIn post, onshore recognition of the Evergrande Liquidators Authority would be momentous and a true breakthrough. Let's just say I don't see it in the cards. Mr. Silvers believes that the court's decision is bad news for all parties and another blow to confidence in China's capital markets because the wind-up order would mark the start of a multi-year, very costly process that is unlikely to result in a significant recovery. Besides, according to experts, in the wake of Beijing's underwhelming economy, the worst housing market in 9 years, and the stock market wallowing at 5-year lows, any further blow to investor confidence could exacerbate the difficulties that China's policymakers are already facing in their attempts to revive growth. CCP formally accepts Taliban's diplomatic credentials. As reported by CCTV on Tuesday, January 30th, Xi Jinping received credentials from newly appointed ambassadors representing 42 countries in Beijing. Among them was Bilal Karimi, the Taliban's ambassador to Afghanistan in China. CCTV broadcasted footage of Xi Jinping reaching out to accept the credentials from Karimi, accompanied by a photo of the two together. A credential is a formal document that one country sends to another when appointing an ambassador or envoy, introducing the envoy or ambassador to the receiving country's head of state. The CCP's acceptance of the Taliban's credentials signifies its recognition of the Taliban regime. On September 13, 2023, the CCP became the first regime to appoint a new ambassador to the Taliban after its resurgence to power. On that day, Zhao Xing, the newly appointed Chinese ambassador to Afghanistan, presented the credentials to the Taliban, officially acknowledging the legitimacy of the Taliban regime. Before this, no country had recognized the Taliban regime. While a few countries maintained diplomatic missions in Afghanistan, they did not appoint new ambassadors and only designated chargé d'affaires who were not required to present credentials. The CCP's acceptance of the Taliban's credentials has once again led to ridicule among netizens. On X platform, they commented, "Rogues must support rogues." A dark chapter in Chinese history that will stink for millennia. The Taliban, Iran, Syria, Russia, North Korea, and the motherland, the central axis of this era, seem quite unbearable. It's worth noting that the United Nations recognizes the Taliban as a terrorist organization. While Russia maintains close ties with the Taliban, it has not officially delisted the Taliban as a terrorist organization and has not recognized the Taliban regime. Consequently, some netizens mock the CCP, stating, "Russia acknowledges the Taliban as a terrorist organization, and now the CCP has become an unfilial child." Don't forget to comment in the section below to share your opinions on today's topic with us. If you find the information helpful, please share this video with a friend to watch together. This will be a great source of motivation for our team to produce more and more quality and reliable videos. And also don't forget to like and subscribe to see more interesting topics from China Truths. Thank you for tuning in.